pair or the inversely. Oh, I need to start again. Sorry, everyone. Ezekiel here. I'll be taking DXY today. All right. So everyone pay attention. So I was saying something a little bit of what we probably are familiar with for those who have done calculus before in school, where they were saying dy, dx, and stuff like that. So, but the DXY here is referring to dollar index, all right? Dollar index. So that's just the relative strength index of the dollar, the weighted strength index of the dollar in relationship to other currency pair. That is what this refers to. And where is the index? You can just go to your trading view. Don't worry, I'll manage my time. You go to your trading view and click on this search, type DXY. And once you type DXY, pick the first one, that is TVC. So once you pick TVC, then you go into it and you're there. So you have your index. What do you use index to do? Let me take you back to the banking. Of course, I'm from the banking background. Anytime you enter the bank, your eyes is always on the rate board, all right? If you track me, put 2 on the chat box. If you have ever entered the bank, I don't know if that happens in a US bank or something or any other part. There's always rate board that shows you the exchange rate. So you don't even need to go and start asking that banker, what is the exchange rate today? Because there is rate board that is telling you naira to dollar is this, pounds to naira is this. They just give you that. If you have seen that before, please put 222 on the chat box. Let me see how many persons have seen that before. All right, so that gives you an index. That gives you something to look at. Like, okay, this is the rate, then let me work with it. So look at DXY as that index, all right, that points to you the strength of the dollar at that particular point in time. Then it's either going to point to you the strength of the dollar, so you will be able to use that to know how to manage your trade on other currency pair that are inversely correlated. All right, I will actually be dealing with those that are inversely correlated or the one that are directly correlated. So which are those currency pair that are inversely correlated? We have GBP, USD. Anyone that has the USD needs are those ones that are inversely correlated. Example, sorry, any dollar, any pairs that has USD, those are the ones that DXY are working hand in hand with, all right? All right, and then Euro USD is another one, all right? New Zealand is another one, New Zealand dollar is another one. So when I say they are inversely correlated, it means when the dollar gains strength, when the dollar is gaining strength, then the GBP that is paired with it will be losing strength. That's the number one thing that you need to know. All right, when it's gaining strength, the currency that is paired with it will be losing strength. All right, will be weak, will be weakened. And if the DXY you see is gaining strength, like right now, you can see it's actually gaining strength right now. So if I go to GBP USD, you will see it's dropping. It's kind of dropping. It's coming to this other side. I love the fact that I'm relating with this using that my Asian range. I love it so much. So see what's happening. It's coming out of the Asian range, showing some level of strength, and on the GBP USD is coming out of the Asian range. It has actually come out. All right. When I was here, it was this red candle. All right. So which shows it's losing strength a little bit. And if you look at this, you can see as it was gaining strength and a little bit of what's it now? A pullback here, which give us this week. Is the resultant effect why this is gaining a little bit of strength back right now. All right. Then the Euro USD too, you can see what's going on. This one actually gives us a clear picture of the inverse correlation. So DXY is gaining strength. Euro USD is losing strength. All right, is losing strength. Now, let's go to our Odogu, what's it, gold. See what's happening to gold now. All right, see what's happening to gold. See what's happening to gold. Is my screen freezing? Oh my word. My screen is freezing, kind of. All right, so on the gold, gold was gaining strength yesterday. We were enjoying it. And today we've been taking both the ups and the down of gold. Let me bring this in. This is where we were yesterday, and gold gained strength. We all took that trade and we enjoyed it. All right, see what happened. See the relative, the inverse, the dollar index right now, sorry. So on the dollar index, all right, as dollar index is trending up, what's happening to gold? Gold is trending down. All right. So as you've done your analysis and you just need some more confirmation, if your analysis is proving to you that gold is going to drop, all right, you can further confirm, like my partner said yesterday, by going to your DXY index. All right. I have one sexy name for it. I call it Dxy. So you can just go to your Dxy. Dxy is simply DXY index. Check your Dxy. Dxy is gaining strength, is trending up, and then our gold is trending down. So this gives you another confirmation. And if I'm you, please, if you're ready, you can actually take this trade. This USD, sorry, XAU USD is going to drop a little bit. All right. So just wait for it. What are we targeting? It's either it kisses. If you want to scalp, you can kiss this fair value gap now. Let me see, what number is that? It kisses this fair value gap 3366 and is likely going to drop down to this support here. It drops down to this support. So I'm not going to take it because I just want to focus on this. But 3366.066, it kisses there, the fair value gap, it taps down to 3362. All right, 3362 from 3366 to 3362. But you split it in 20 pips. If you have not compound today, that's straight for you. All right, but if you want more high probability trade, you can allow this candle to come to 50% of this candle and it's still going to drop. All right, so from here, that's going to be 3371 and you aim it to 3366, then 3364, and then 3362. You can have your TP1, TP2, TP3 that way. All right, so let's continue. So the point here is that as DXY, as Dxy trends up, I would like to continue using Dxy, so be familiar is the same thing. As Dxy trends up, our gold trends down, meaning our gold loses strength when dollar gains strength. All right. Why is that? It's because they are inversely correlated. All right. The positive effect of this, the opposite is the situation with the pairs that are inversely correlated with it. And you name them. Gold is inversely correlated with Dxy. GBP USD is inversely correlated with Dxy. And then Euro USD is inversely correlated with Dxy. So those are the things you need to familiarize yourself with and be using Dxy as your checkpoint when you have done your analysis. So it's not the first, it comes confirmatory. It's not the first thing, it comes confirmatory. So don't just look and quickly go and jump into trade. Do your due diligence on the assets pair you are working on, then use that as a confirmation to continue with what you are doing. All right, so I have like 10 more minutes. All right, so if you want to write something down, I will just kind of state how I'm classifying this. If I should give this strategy, if I should give it a name, I will call it aligning zone strategy. So now let me go into aligning zone strategy and how that relates with SMC strategy. So I use my uh, I use my my PowerPoint to do that. At least you've gotten the idea of the inverse relationship. So I'm pausing there. So let me use my slide and quickly show you aligning zone strategy. You can employ that to your SMC and let it be that Dxy is also giving us another strategy. We've learned a lot of strategy. All right. Where are you? PowerPoint. We've learned Asian Liberty. We've learned SMC. And now I'm propounding another strategy, aligning zone strategy with Dxy-Smc. Sorry, give me a sec. Where's my PowerPoint? Oh my God. Few minutes, please. PowerPoint, where are you? Are you serious? Okay. Sorry, 1 minute. My PowerPoint was opened yesterday, but the time was not enough, so I didn't take it. I didn't even know I didn't open it anymore. All right. Sorry. Sorry, I'm coming. Oh, can't I see my PowerPoint? Okay, yeah, I'm good now. I can see it now. All right, so like I was saying, an aligning zone, strategy. So you watch out, you watch your Dxy. I've shown you where to check your Dxy. So look at what's happening here. On Dxy, I brought up Dxy. See what Dxy is doing. So right here with our order block, I can see how the order block is highlighted here. Just kind of pick this out so I won't waste the time. So the order block is picked out here. And at this point, the market started dropping. And of course, what's it now? This gives us our demand zone. All right. Why this gives us supply zone. So this is giving you a true supply. All right. So this can also give you a sense of how you can even distinguish between resistance and a supply zone or supply and demand zone, how you can distinguish between them. So if you pick your order block right here and you map it out, you are waiting for price to tap back into it and then it start dropping again. All right, that's our SMC, don't forget. So as price taps back into it, do a 50% of that. All right, it starts dropping again or kisses that other block, it starts dropping again. That's what you're looking at for. So DXY is just an index. You're not trading on it, but your strategy applies. All right, you can analyze DXY like SMC, which we've done the analysis. So you go to slide 2 now, see what is happening on slide 2. Maybe I should do a slideshow. Okay, so slide 2, the situation on DXY is the inverse situation on Euro USD, for instance. All right, you can apply this to gold, but gold did not give me that balance SMC inverse relationship and an aligning SMC inverse relationship. It didn't give me that. So, but Euro USD give me that. So you can look out for that at some point on XAU USD. All right. You know, the margin, the gap is very big, though it might not really align. You can just use it to confirm if gold is gaining strength or not. So on Euro USD, see what happens. The same pattern. You see that pattern? You see that pattern at the top? came down, went back up, tap into the other block, and then start dropping. That's the pattern. If we go to Euro USD, which is the currency pair in this, you see that it went up, came down, and if you have entered from here, it started going back up. That's what happened. So where you are having a demand zone on the Dxy, you are having a supply zone on the currency, inverse correlated currency pair. All right, inverse correlated currency pair. I like that. Some persons are saying TP1 hit. Sharp people. I love you all. All right, so you see that inverse relationship. What happens here is on the inverse case on Euro USD. And then what do? You just go down to a lower time frame. This was on a 4-hour time frame on the top-down analysis we did at first, just to check that aligning strategy. Does it align? Is it what we saw here? Is that the inverse situation on the currency pair? And yes, it is true. Confirmation 1. So then you go to a lower time frame. You've already mapped out your demand zone. All right. So as soon as it taps back into it on a lower time frame, all right, as soon as it taps back into it, you're ready to take a trade. So you move from 4 hours to 1 hour and further move to 15 minutes. All right. What are you waiting for? You're just waiting for the best time to enter. So as it taps back into your demand zone, you trigger. And when you pull your trigger, what happens? It rallied, oh, and you make your profit. All right. So you can see that inverse aligning zone strategy can work for you on Dxy. So if you are not a fan of Euro USD, of course, if you want to apply this strategy, you can be a fan once in a while. All right, because it gives you that aligning strategy on Dxy against the inverse correlated currency pair. So now let's see. That's when you could use SMC to take trade using your aligning strategy with Dxy. All right, when you should not take trade, let's look at a situation where you should not use Dxy and the inverse correlated currency pair to take trade. Let's look at when you shouldn't. So look at this now. Look at this one. All right, see the Dxy. Dxy is giving us a supply zone mapped out already. All right, suck the liquidity and start dropping. But by the time it taps into the liquidity, which is the order block, you see where it stops. It's doing like a 50%, 60%. All right, it did not break that structure. Then it started dropping, which makes you know that it's actually going to drop. It's not this breakout and continuation strategy that we talked about since Liberty strategy. All right, it's respecting our supply zone, and then it moves down. So we are looking for the inverse relationship of that, aligning on an aligning strategy. Does it align on the inverse correlated pair? We come here, which of course should be the opposite side. So the opposite side, we have the order block. And when this we tap into the order block, which is the demand zone, it breaks that. It breaks that, and I haven't broken that, it invalidates it. So the first situation, let's go there. All right. See the way it is, the order block, which is our supply zone, we expect a demand zone on the inverse correlated pair. The same way, it breaks into it comes into it, taps into it, but did not break it. And then we took that trade and got this profit. All right. Then when it comes to the other strategy, still SMC we are looking at. All right. When the Dxy tapped into the supply zone, all right, it didn't break out of that, just tap into it and start going down. We expect it to start going down because it was not a break of structure, which would have been a break of structure and continuation. All right. Rather, it taps into it and come down, meaning it's giving us that a sign that is going to start trending down. So we look for the inverse of that. The inverse is for us to look for it to start trending up on Euro USD, for instance. So we come here on Euro USD for everyone who's been trading that. So right here, When it gets into the demand zone, which should be the inverse relationship with what we were seeing on Dxy, what happens? It breaks the demand zone. It breaks it, all right? It breaks the demand zone. And anytime it breaks it like this, you should really be careful. It might not hold sometimes. You can just do a break of structure and continuation, and that's what is going to happen. So if you see that it is not a high probability kind of setup, all right, it might respect it, it might not respect it. So just be on the lookout for that. Know when your SMC will apply on a case of alignment of strategy, but it has to be on an inverse situation with the currency pair you are looking at, which are those inverse correlated currency pair, and know when when it is not going to respect your demand zone or your supply zone. Just watch out for it, because anytime you're looking at order block, that's in context of fair value gap. That's where you have order block, and that's in context of SMC. So just like we say, Dxy and SMC application, this is how it can work for us if we are considering Dxy and SMC application. If it's for gold, please just look at what is happening to it. Is it trending down? You expect gold to trend up. All right. If it's trending up, you expect gold to trend down. But make sure you are done with your proper analysis on gold before you check. And then if it is Euro USD, you can now look for that aligning strategy. If it's trending up and it's giving you another block, then you should look for that same pattern on the reverse in the reverse situation. And that's when you can actually say, okay, this is good for me to enter, and I'm going to take profit from there. All right. So thank you very much. Oh my God, I've eaten into 7 more minutes. Sorry, Team B. All right. So I'm going to pass it on to Team B. Thank you so much, everybody. Thank you.
Thank you, Mr. Ezekiel. Team B, we apologize, but this needed to be cleaned out. So Auntie Bola, we're waiting for you. Thank you very, very much, everybody, for understanding. And Auntie Bola, if we are not able to finish it, we'll spread it so that the activity for Friday can reduce. But let's do this right, okay? Thank you so much, everybody. Mr. Bola, yeah.
Thank you, ma'am. Thank you very much. We really appreciate all that has been done, and we really appreciate Mr. Ezekiel for the in-depth. In actual fact, we know we are not as detailed. That's why we actually wanted to come after him so that he can round up everything. But all is well. I would like Madam Letitia to be made co-host so that she can. Letitia, please, can you raise your hand so that the host can see you and make you co-host?
So you are co-host now, ma.
Thank you very much. Mr. Ezekiel, thank you so much. Yeah. Good morning, everybody. All protocol observed. Mr. Ezekiel has really talked, well, I say 3/4 of what I intended to say, because we noticed yesterday that really talked about on what is DXY and how it is correlated with other peers, which Mr. Ezekiel have done that right now.
His Grammy acceptance speech, because it's incredibly relatable.
Hello, can you hear me, please?
If I didn't win.
Yes, we can hear you.
Okay. So now we're going to say the remaining points which we intend to share with you, and that is how we can use the DXY index to enhance our win rate in smart money concept trading. Of course, this is a powerful edge, and just as Mr. Ezekiel has rightly said, it is for confirmation. So first, we need to understand the role of this DXY in SMC. The DXY gives a macro view of where USD liquidity is being injected or removed. Then, using it in our SMC, we need to
from his Grammy acceptance speech because it's incredibly
we need to do a top-down analysis starting from higher time frame to a lower time frame. Also, we need to identify structure, break of structure or change of character to confirm the directional bias. We also look for supply and demand zone mitigation or liquidation gap. So we check our target pairs to confirm SMC structure for confirmation of divergence. So if DXY shows a bullish change of character plus demand zone being respected, if we're using gold USD, or for USD will be showing a bearish break of structure. And now we have a confluence. At this confluence, we can take it as an opportunity to enter our trade. What kind of trade are we entering in this scenario? We're entering a short trade of sell. So in summary, when we are using DXY index to enhance our win rate in smart money concept trading, we must ensure that the currency pairs we are using exhibit opposite structure in line with DXY bias. We also confirm that the currency pairs we are using also have some SMC zones like the other block, the FVG lining up inversely with DXY zone, rejecting and giving confluence. So the next speaker is going to talk about the practicality of what I have just said now. So I'll be calling on Madam Bola to take over. Thank you very much.
Thank you very much. Thanks. Big thanks to Mr. Ezekiel and Madam Letitia. Kindly make me co-host, please. Okay. I'm already co-host. For us, there isn't much to say again because Mr. Ezekiel did a wonderful job. I must commend that. But that notwithstanding, we will show what introductory material we've done before now. So please, can you see my screen? I'm sharing. I'm on gold. And first of all, as a trader, we've checked today, and there is no high impact news as of now. And we want to, and first of all, we want to establish where is gold, what's the trend, and we'll be starting with a monthly time frame. Right now, we are on the monthly time frame, and if we see my screen, it's saying Friday, August 25. And this is showing us that we are in a bullish trend. You can see it's green. Although at the same time, we can also see that it's having some wicks, indicating that there could be some sell somewhere along the line. Wicks naturally is a strong indication of reversals, but the wick in this case is still green, showing that the trend on monthly basis is bullish. Then we go to the week. On the week, we can see some elements of being bearish. And that is not surprising because of the week we saw on the month. It's part of the process because Both the month and the week are still relatively fresh. So we move on to the R. And as day traders, we deal more with the lower time frames, but the decisions on trends are made with the higher time frames. And with that, we've concluded already that gold is bullish. But within it, we will experience some bearish trend lines, but it's largely bullish. Now that we are on 1 hour, we can see where it's trending. And at this 1 hour, we would like to take a point of interest from where the price is now to the end, to the nearest zone, which is the end of the week. This week that we are seeing here, we want to make that a point of interest. And at this point, we also want to introduce some other indicators to help us. At this point, I'll be introducing the Lux Algo Smart Concept. Smart Concepts SMC Lux Algo indicator. It will help us mark our break of structure, our change of structure, as we can see. I don't want to go into marking them because if I do, it will take more time. So I will just leave them like this. I hope you can see the break of structure and you can see the change of structure. Can we see them?
Yes, Auntie Bola.
Yeah.
Okay.
Yes, we can.
Okay. So I don't want to start drawing so that it doesn't take more of our time. From there, we've already decided what is our point of interest. This is where we want. Already, the market is a bullish market. So we want, in line with the SMC, we want to move from the supply zone, which is this above, this zone above, sorry. Yeah. We want to move from that zone above down to our point of interest before we take a buy. And if we also remember, our chairman is always telling us, allow the pullback, allow the pullback, don't buy or sell from, don't buy from the roof, buy from the bottom, from the base, meaning buy from your demand zone, buy from your resistance. Buy from your support, don't buy from resistance. So we're waiting for this to come into our zone. Then we can take a buy. While we are doing that, I would also like to introduce another indicator which is necessary in the SMC. That is a fair value gap. Lux Algo fair value gap. So that is it. We are only allowed to do two indicators on the free version of TradingView. Otherwise, I would have loved to also introduce the Asian range as well. So now that we've done this on the one hour, we've identified where we want to go. We want to buy because the higher time frames is bullish. And we want to buy from the demand zone. So we will wait for it to come from there and reach our supply, reach our zone. So let's go to 15 minutes and see what is happening. We actually finally conclude based on the lower time frame. So from here we can see where break of structure is. And we can see where our fair value gaps are. And we can see where they stand in relation to our point of interest. So right now it's showing that buying is commencing, but we would really like to see after the next candle showing us that we can actually go into the trade. But before we take the trade, we have to take into consideration our DXY. Are we aligned? We've just been told that the DXY and gold are inversely correlated. Being inversely correlated means when DXY is buying, gold will be selling. When gold is buying, DXY will be selling. So with that, we want to go and check what is happening with DXY. So we'll change our currency to DXY. If we have paid TradingView, you can actually view two charts together on the same platform, on the same page. And in that case, it makes comparison of two different charts very easy. You have your gold on one side and you have your DXY on the other side. You also establish the trend of the DXY from the higher time frames, just as Mr. Ezekiel has taught us. So let's look at daily, not to go too far. The DXY sorry, please. All those drawing things are just disturbing. Sorry, this is why I don't want to start drawing. Anyway, let's go to 1 hour. I hope those drawings won't be so. From here, we can see that the DXY is beginning, has had a good day, being bullish, but now is beginning to sell. Earlier today, it was bearish. And what did that tell us? Our gold is also about to start buying. Earlier today, it was bearish. I'm changing to 15 minutes on DXY. So from these points, we can see that we are in correlation with DXY today at this moment. And that gives us confidence that our analysis on gold is in line, is aligned with DXY, is aligned with SMC. So I'm going back to gold. That confirmation gives us more confidence to go into that trade. And I just want us to see what has happened on gold. Gold has actually sold into our zone, and we expect that very soon it will start selling. I want to check what is happening. But while we are talking about correlation, we also just want to mention that correlation is not absolute, it's not 100%. Sometimes it fails. Sometimes it does not hold, but majority of the time it does hold. So we have to do a technical analysis and come to our conclusions before the correlation is an additional tool to help us conclude on what we want to do. So at this point, I'll come back to 5 minutes and see if we can take this trade. As we can see, there is a fair value gap. I want to look at 30 minutes. Yeah, 30 minutes is clearer. There is a fair value gap on the other side of the zone. Our analysis is still holding, and that's telling us that very soon we should be able to buy gold because it has come to the support, it has come to the supply zone. So if we were to give a trade now, we'll be looking at buying gold, and we'll be looking at buying it from, we'll be looking at an entry price around 3360.805. We'll be looking at an SL below the last sorry, I just want to move this to show us the last candle. So as a stop loss will be a maximum of 3352.6 using the lowest candle next to that, the lowest weak place. And we are looking at weak because there are indications of reversal. And then our TP, our first TP1 will be around 3373.375. Our TP2 will be around 3380.708. And our TP3 will be 3385.413. So this is our submission from Group B. Thank you very much.
All right, Auntie Bola.
So
thank you
sharing.
so much. Yeah, Auntie Bola, you can stop sharing. Can you hear me, Auntie Bola?
Yes.
Okay, thank you so much. That's a powerful one. And Ezekiel, that was quite awesome. Please, can you go ahead and stop the recording, Ezekiel?